The inflation rate in the United States turned out to be higher than expected, so the US dollar's reaction was quite natural. It rose at first, but then started to decline. Why did it happen? Let's figure it out. The greenback might have decreased because of fears that high inflation is not a temporary factor. Earlier, the Fed has assured market participants so many times that inflation is temporary. So, after the opening of the economy, it was meant to inevitably decline to the target level. However, the inflation rate stubbornly remains high. In fact, yesterday's data made investors realize one thing: global inflation is not going to ease, and it's likely to last far longer. After that, traders reassessed the inflation report, and their reaction to it was quite predictable. The US dollar began to decline due to inflation expectations, whereas gold and Bitcoin advanced. The US dollar index may fall to 93.70 from 93.90. Some analysts believe that it may decrease even lower. The dollar-yen pair is trading steadily despite controversial inflation data. Today, it's likely to rise higher. Yesterday, the S&P 500 climbed by 0.3%. Today, the Nikkei added 1.07. The growth of indexes may be a catalyst for the pair's increase, so it may break through 114.20 in the short term. Meanwhile, Australia revealed a rather negative report on the Consumer Sentiment Index. The region fell by 1.5% to 104.60 as concerns about the economy's long-term prospects overshadowed optimism from the easing of coronavirus restrictions. However, this negative data did not significantly affect the AUD-USD pair. The Australian dollar is ready to climb higher. This morning, the price is trying to break through a new level even despite the release of the unemployment report. The nearest target is the 1.7445 level. If the Aussie consolidates above this level, it may well touch 0.7566, its lows of March and February. In general, the market reaction to new data from the US and Australia is rather muted. That's why it's better to wait until things get clearer. However, we are sure that our forecasts will be correct as they are based on a variety of factors. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.